Welcome to Oregon Cash Flow Pro. We're going to hop into our high yield dividend ETF portfolio update for this week. We're still over $9,000 a month generating income, but as you can see, each one has gone down. The dividends are dropping a little bit, and we had a rocky last couple of weeks. So let's take a look and see where things are at and what we see happening in the future. But first, if you're interested in these high yield dividend ETFs, do me a favor, in the comment section below, tell me, what is it that you are hoping to get? When you click on a video like this, are you trying to just see what other people have in their portfolio and get some ideas? Do the big income numbers just make you want to click? Or is there something else that you're trying to learn? Because I'm trying to make videos to help you guys out, to get you the information that you're looking for that you might not be getting somewhere else. In that vein, I made a couple of videos over the last couple of weeks, but they haven't gotten a whole lot of attention. One of them I was pretty proud of was about return of capital. And are they just giving you your own money back? If you want to know a little bit more about return of capital inside of these high yield dividend ETFs and the tax advantages of those, check that video out. I'll put a link up in the corner here. I also did this video, qdte versus NDX, where we look at a high yield ETF ticker and its underlying and see how they perform together. And we talk about overall total return, how they compare in taxes, and how to choose which one, because there's a lot of information out there where you've got fund managers and portfolio managers that swear that there's no use for these high yield dividend ETFs and that covered calls are always bad, even though some of these funds don't just sell covered calls. We like to talk about and look at the reasons people are actually buying these things. And also, in one of my earlier updates, I addressed a lot of the common concerns that people had about these high yield dividend ETFs, and we come at it from a different angle. So there's a lot of value in those. Be sure to check those out. You can find all of those videos in my playlist on my channel as well. It's the high yield dividend ETF playlist. Now let's hop into our first fund and see what's going on in there. This one is our smallest one, but this one is separated out. These are after-tax accounts here, and it's separated out from my other after-tax brokerage accounts because this one is in our 0% credit card challenge account. So we are utilizing some of these to get the dividend kicked out that's going to be making our monthly payments on the credit cards that we use to borrow the money to fund not only the purchase of these, but the trading that we're doing. So some of these funds like Blox and Coyy, they end up selling and buying spreads. ULTY does a collar strategy. Coyy sells puts for income. I'm actually doing all of those with the actual cash that we got from the credit cards. And we're going to do that over the course of the next year and track it and hopefully pay back the cards and the fees and still have money and shares left over. These are the shares I'm hoping to have left over so that we can continue to earn income when we're done with this challenge. So currently we're sitting on a couple hundred shares of Blox, 600 shares of Coyy, and 200 shares of BITK. Now this one came out of the gate really strong a few weeks ago, paid out $1.50 dividend. We didn't get it before that one. We picked it up after that when they lowered the dividend rate to 50 cents. And then they lowered it to 30 cents, and now they're down to 15 cents. So I hope they don't keep lowering that dividend. We've had a couple of rough weeks. So hopefully it bounces back and that dividend picks up because right now it's on track for a payback over 40 weeks, which I'm not thrilled about. And the performance hasn't even been very good either, but I don't worry about the performance. We have to look at what the actual market did over the last couple of weeks, and it wasn't great. It was up and down. Blox, still killing it. Blox has been doing really good. It dropped down but bounced back. Coyy took some big hits. Coyy sells puts on CONL, which is a 2x leverage fund on Coinbase. And Coinbase got hammered bad. Basically blew right through the puts on these for a couple of weeks. So the dividend has been coming down on these. We own quite a bit of shares. We're still looking at a 10-month payback period. So hopefully this works out. This is all I'm hoping for. I'm hoping we get 10 months or less based on the dividends and that we'll still have shares because I do think Coinbase is going to go back up. Now, it did go back up end of this last week, and we had a little bit of a recovery. But if it just sells puts on the 2X leverage fund, we only make money when it trades sideways or goes up. And we don't even get all of the upside. So CONL that this sells puts on Friday, I think on Friday itself, it went up 20%. And I think coyy went back up 7%. So like, you're not going to get all of the upside because we're only going to get to keep whatever we sold the puts for. So a bit limited in what we can make, but it's still a legit strategy to make income and hopefully make enough to pay back everything I paid into it and continue to pay dividends long after that. That's our hope here. So total dividend income for the month on this account, $16.56, down slightly because the coyy dividend went down and the BITK dividend went down. Now, I tweaked this a little bit because what it should say right here is the average of the 3 trailing months. But because it's so wildly variable, and this number here, where it gives you my current monthly dividend, is based off of this, I don't know that it's going to go back up. So I don't like to base it off of that. So I'm just leaving it at this number so that we get a more realistic guess over here. Now I'm doing the same thing with msty and one of our other ones, but I'll show that. msty switched to weekly, but that 3-month average takes into account that it's not weekly. And so there's some really big numbers. I don't have any shares here, so it doesn't mess with the totals here. But that's it for this one. Ultimately, I would like to expand what we own in blox. And I also would like to expand into probably qdte and maybe lfgy. lfgy has been solid, really solid. And qdte's underlying is ndx, which we want to have exposure to that in the long run. Now, I keep thinking that we're going to get a nice dip in ndx, and it just hasn't happened. It keeps bouncing back. We're still in an uptrend. So I'm kind of holding the cash where I can control it with the trades that I have. And when we do get a big dip, that's when I'm planning to load up on some of these things, although we may end up just going long in some of those underlyings as well. I mean, I'll probably do both, realistically. Let's hop over to one of our other ones. Oh, quick look at the distributions. We only have a few here. So our distributions for the week did kick up because we purchased some more shares. And this is what it looks like in a nice graph picture form. There's each week's payout. And then this is total return and cost basis. We have the dividends in blue, red, the current value of the shares, yellow, our total return, and then green is the cost basis. So neat to track it this way and just see what it looks like. Over here in cost basis, you can see if we added any. We did not add any this last week. And when I go to the fund managers tab, you can see the percentage of our portfolio. Now, Granite shares, the big part of our portfolio because of coyy. And then Nicholas, we're at 37.55. I didn't put BITK in here. I'm going to have to add that. There we go. Now we've got it in there. So we're actually at 47% in Granite shares, 28% exposure to Nicholas, and 24% to Tuttle Capital Management. So we do like to have some diversification, but realistically, I'm looking at this in addition to what else I have in our after-tax brokerage accounts. So it's not that I have to be completely balanced over here just in this one for this challenge. Hopping over here to our other after-tax brokerage accounts where we have a bunch more capital deployed among these. We still have 410 shares LFGY, 251 qdte, 20 msty, 210 xbty, 850 ULTY, 120 in blox, 385 in coyy, 100 gdxy, 100 in bito, and 100 in bitk. Now, some of these are really doing well. Blox, we haven't added any since basically when we first started purchasing. So we have a really low share price and it is just crushing it. Now, it's too bad we didn't load up a lot more at that time, but it was pretty early. We didn't know how it was going to do. Now, what you can see down here, we have months until money printing. There's 2 different numbers here. This one is utilizing the last dividend paid only because sometimes that dividend drops and it just stays there. And I kind of want to know what that number is. And then we also have the 3-month average. Well, the 3-month average, if it's been way off, again, here with BITK, I switched it because I don't want this number to fool me by using the 3-month average that is way too high. Same thing here, gdxy just switched to a weekly pay. So I did the same thing here with that one because it was too high on the 3-month average. Same thing with msty. msty obviously we only have 20 shares and we bought them a long time ago. It's going to take a long time for it to pay those ones back. And it's just not looking pretty at the moment. We'll see if that one ends up bouncing back. But you see blox is just crushing it for us. gdxy, underlying is GDX, which is gold miners, just doing really good, although it's come back quite a bit. This was up at $17, and it was on par with where blox was at just a week or two ago. Bito, because Bitcoin dropped down, fell back a bit. Maybe this jumps up this next week. Looks like Bitcoin's climbing this weekend, but still doing decent overall. At least we're positive. We haven't had it for all that long. And then lfgy, this one we've had for quite a while, and it's doing well. So we really like that. It's a large position in our portfolio, the largest, even in our Roth accounts, I believe it's our largest. And we're just really happy with that. qdte also doing really well. Now, the payback period on qdte is still a long time. When you look at what the current dividend rate is at, longer than I like it to be, and lfgy, payback period is way shorter. So like this is like our star player right here, lfgy. And then blox, the dividends aren't going to pay it back in time, but we do expect that NAV to grow. So that one's going to be solid. ULTY, also expect to be fairly solid. This one's just outside of being positive, but the payback period is still pretty short. Ultimately, I like what these funds do. ULTY, blox, lfgy, and qdte, because the underlying is a basket of stocks that they're utilizing. lfgy and ULTY, they're making money trading. Same thing with blox, but blox also has a base position in crypto. Same thing with lfgy. lfgy holds some positions in crypto too that aren't capped on that growth side. As you can see, a lot of exposure to crypto in here. Current value, 45,000, but we have received over 8,000 in dividends, and our total return 5% on this whole entire portfolio so far. Now, we started this portfolio earlier this year. In fact, most of it was later on in the year too. So having that 5% average is not too bad. Obviously, it's not keeping up with the market if you go back to the beginning of the year, but it's been a really good year in the market. And a lot of these positions we've added to when the prices were higher. And some of these really got hammered over the last few weeks. xbty really got hammered quite a bit. I'm not sure why that one hasn't done any kind of recovery lately, but we're hoping that it makes it to the payback period so that we're working on house money within the next year and a half. Here's those distributions. Some of our funds were monthly funds and they shifted to weekly. So we haven't added anything. I don't think we added anything. Yeah, we haven't really added anything, but you can see this was our monthly, this was our monthly average without the one-time payers jumping in. This was with the one-time payers jumping in. And now that they're weekly, this is just up a little bit higher. Now, this is our after-tax account. These will be going up because we are going to continue to add a little bit to some of these funds. But I'm kind of done buying until we can make some really good buys on dips. I take these dividends, I sit in cash. I don't automatically reinvest them because I'm hoping to buy the dip when the dip happens. And in the meantime, we'll just keep banking. Now, the cash that I'm sitting on there, I don't just let it sit in cash necessarily. I could be using options trades where we're selling puts or put spreads, or we're getting into some income producing positions by buying deep in the money call options and selling against those. And we're also running the wheel strategy. So I kind of do inside here everything I'm doing in the challenge as well, the 0% credit card challenge. But that's what we're waiting for. I do like having these positions. One thing I'm going to start doing is earmarking them for specific expenses. And I'm going to start consolidating these accounts probably as well. So I may end up cashing out. I have quite a few brokerages that I'm holding all these in, and there's no reason for me to. I got to figure out ultimately the strategy that I want to use and then which brokerage account is going to best help me do it. I'm definitely thinking of consolidating. Here's our breakdown for diversification. You see yieldmax, still the heaviest part of our portfolio. A lot of that is because of lfgy, which we just love what we've been getting from lfgy. So we're not getting rid of anything. We're just trying to add to it so that there's some balance. Roundhill and Granite shares coming in second place. Then we got Nicholas and Pro shares. Let's add in a BITK so that is a reflection in there as well. Okay, now it's right. 43, 20, 27, 4, and 5. Now, I may end up getting out of that Tuttle Capital one too if that does not turn around. It just hasn't been around long enough. It looked like they were going to try and be aggressive in how much they were paying out. But if they're not going to be, I'd rather be in something else. I already have plenty of exposure to Bitcoin and other crypto things. So I don't really need exposure to Tuttle Capital if it doesn't look like it's either going to go up in actual NAV or pay out a good dividend. One or the other. Like, give me a good reason to hold on to that. That's what I'm looking for right now. In general, I look at these like buying rental properties, and I'm not just going to get rid of it at the drop of a hat, but a substantial change in dividend right after I hop into it and start picking it up, that might change the thesis quite a bit. Let's take a quick look at the charts. Here's what the dividend looks like on that one. And here is our overall value chart. Again, lfgy, just the star of the show, looking really good. And then we've got blocks in here too. I definitely would like more exposure to blocks. Bito doing well, gdxy doing well. And we have a pretty solid position in coyy, so we would like to see that one bounce back hard. Hopping over to our Roth accounts, here we go. Got 70 grand worth of high yield dividend ETFs. You can see a big position lfgy, 575 shares, 150 qdte, 250 in msty, 300 xbty, 1700 on ULTY, 205 in blox, 823 in coyy. Again, blox, star of the show here for overall returns, but lfgy, the star on the dividend return, qdty, kind of a mix of both, doing really well though. We like where that one's positioned. msty, the big loser, and then xbty is fighting them for it. What's our payback period on these ones? We've got 10 months on coyy, 14 months on lfgy and ULTY, both green in this side. 16 and 17 xbty and msty, 31 on blox. Now, we're aware that blox does not kick out a big dividend, but they do have an intent to pay 36% and grow the NAV. So their goal is a 50% return. 36 goes out as dividend. The other 14 going to grow that NAV. And it's done a better job than that at growing the NAV. So we'll see how this ends up playing out. But I'm okay waiting like this because this was the kind of performance I was hoping to get from qdte. I actually wanted qdte to have a 3-year payback, but the dividend keeps coming down a little bit. So like just based off the last dividend paid, it takes a little over 3 years to get that payback. That's okay if we can grow the NAV, but it's been struggling a bit on growing the NAV. Blox seems to have done a better job, but Blox is still relatively new. Actually, it's still very, very new. So it'll have to see if it stands the test of time, but looking good so far. If you like this spreadsheet and you would like access to it, it's available in our Discord. Our Discord is open to members of our YouTube channel and Patreon, and it only costs $1 to get in there. So it's not a big barrier to entry, but it keeps the trolls out. And it's a great place where anybody can ask me questions. That's the first place I go to. If I see that I have notifications and people have questions for me, I'm active in there if you have questions for me. So if there's something that you need, don't be afraid. Don't be shy. Join as a channel member. Hop in there. Let's have a conversation. This is what it looks like on this chart. Our total returns. We've got it all compiled in one place. From a cost basis standpoint, we've added just tiny bits of shares in one of our accounts. And there's our diversification breakdown. I hope you found this helpful. Like I said earlier, my goal is to help you out, educate you, maybe give you a little bit of a different perspective on these things, how we like to utilize them, what we're looking to do with these. Right now, we're just sitting on cash that these kick out and looking for strategic buy opportunities, certainly if the market dips. And in the meantime, we're just going to keep making trades and earn the income that way instead of just sitting on cash and doing nothing with it. We don't like to do that around here. It's all about optimizing our cash flow here. So be sure to check out those other videos that I made with regard to these high yield dividend ETFs. I also sell high cash value life insurance with the best designs that you will get anywhere. I do free consultations in regards to finances and life insurance. If you're even in the market or you're working with another agent, you want me to take a look at an illustration you got, let you know if it can be improved, I do that as well. So I look forward, if any of you need help and you want to schedule a free consultation with me, that link was right over there. I wish you the best of luck out there, and we will see you next time. The next 20 seconds determine your future. Subscribe, meet with me, or continue educating yourself with these videos right over here. I appreciate you. Now go maximize your cash flow.